Hello, welcome to Conversations with Chris, Coronavirus Edition. This is Chris Vogt, your professional connector and commercial realtor. And today our guest is Michael Ryan, mortgage broker and a friend of mine, who I know from the Commercial Brokers Association. Michael and I are working on several projects together. We were talking on the phone the other day about many of the changes that are occurring in the market for credit during this interesting and unstable time. Michael, welcome to Conversations with Chris.
Thanks, Chris. I appreciate it.
Really glad that you could join us. Now you're over in Saratoga, correct?
Santa Clara, so Silicon Valley area, yes.
Mm-hmm. All right. And you also do residential and commercial lending, correct?
Correct. 30 years doing soup to nuts.
All right. Well, a lot of things have changed in the last month. Today is what, the 22nd? Is that right?
Yes.
It's tough, when you're sheltering in place, and we're like, what is today? Is it Tuesday already? It is. Oh, it's Tuesday the 21st. All right. That way you have some perspective if you're watching this by recording. So what's happening in the credit markets today?
Well, you used the term earlier, instability. That's a lot of what we're finding. Trying to determine where the market is going, which everybody wants to know, what's it going to be tomorrow? It's about like trying to predict oil prices or stock prices.
Yeah, can you believe that oil closed at negative $40 or, well, I mean, after hours, negative $40 per barrel because no one wants it. I hope the U.S. government bought a lot of oil at that price.
I actually heard to where it's actually before Congress to authorize buying 75 million barrels. There is room in the strategic reserve and also potentially renting out the strategic reserve for storage. So,
I hadn't heard that one.
Yeah, another income source potentially. But all this, it actually does lead in and out of the lending arena because we are in the unprecedented times of the government trying to really keep everything afloat. With unemployment rate expected to go beyond 20%. The various prognostications on what GDP is going to be. We're all calling it a recession, although technically we haven't crossed the milestone of 2 negative quarters. But for all of us, it's a foregone conclusion that we'll get there.
Right.
So with banks, it's really a quiet fear that's driving everything. Another news bit I picked up this morning is it's currently estimated on the residential side that 6% of all the residential loans have filed for or are going into forbearance.
6%?
Huge
Wow.
numbers, 6% of the mortgages. And this is with, coming off of, we had foreclosure rates that were like 0.15%.
Mm-hmm.
So this is, we're talking 2 months move, just a huge shift. So with all the commercial lenders, we have two things working against new originations. One is concern of the quality of their current book of business. All
Right.
the loans they have in, who's going to be paying the mortgage? Your retail strip centers, are the owners strong enough to float when, a quarter or half of their tenants don't pay mortgages?
Mm-hmm.
So right now, everybody's working through that, trying to ascertain what the new risk is just in the existing portfolio. What's their balance sheet? And
right.
As a part of that is also the banking regulations. When you have these things happening, how do the banks state the value on the balance sheets? And then the balance sheets lead to, are they able to lend more money out? So
Mm-hmm.
that's the one thing driving to where we're not going to hear from our member banks. Nobody wants to tell us how bad personal finances are in an individual's household. We will all put a big smile on our face and go, we're okay. That's how it goes.
Well, the interesting thing is that some people are actually doing really well during this time. I was
Yes.
talking to a client yesterday who's in the medical profession, and his office is doing better this year for March than last year for March. They're doing better this year for the first 2 weeks of April than they did last year for the 2 weeks of April, but they are below plan for this year. So they've had an impact, but year over year, they're doing better than last year.
Right. So we, you know, with any kind of market shift, there's going to be, you know, we call them winners and losers. You know, it's just a conversation I have with one of my investors that has a number of large commercial projects nationwide, and the end of March had a retail center had a call from the dentist in that center who was calling, being very proactive, saying, my doors are closed.
Right.
I can't pay my rent this month. So he immediately started calling all the other tenants in the center, in the complex. And it was very interesting to note that when he talked to the liquor store tenant, the owner there actually chuckled and said, our sales are up 60%.
Right.
So imagine a world where all of a sudden a liquor store is perceived as a higher credit quality tenant than a dentist. And so this is the brain damage that all of the credit committees at all of our local banks are dealing with. Is where's the risk now? We changed everything.
Right.
Secondarily, what we're running into, and you and I working with our current clients are stumbling through, is also the ability for the banks to process commercial loans, because they had the personnel to do a regular, normal annual book of business, new loans coming in, all the processing, everything going. And now we have PPP, the Payroll Protection Plan, that came out from the federal government, from the SBA, to help small businesses. And this was pushed through in a matter of weeks to the banks to take in the applications and do all the processing and do all the funding. And where's that personnel coming from? It's coming from the credit committee, the underwriting department, all of the personnel that would normally be taking in our
normal business
winery loan, our doctor loan, our auto shop loan. So we're also, hitting this time block. So I was quipping last week with another client. I even think I shared it with you, as just to pick a rough number, I am currently down 60% on my potential member banks to do loans with, just because of these two things that we're dealing with. We're still open for business. It's just what used to happen in 3 or 4 days is now going to take a week and a half to 2 weeks.
Right. Well, I'm really curious. Here we are, the 21st of April, like we talked about earlier. Just this morning, I was hearing on the radio about 30 minutes ago that Sutter County, which is in Northern California, outside Sacramento, where Yuba City is, they're ready to reopen for business because they haven't had any new cases. Placerville hasn't had any new cases, and they're ready to reopen for business. Texas and Florida reopening for business. California, New York, definitely not reopening for business. South Dakota never shut down. And so when you look at what's going on in the market and you look at what's going on with credit, if you were to make an offer today for a commercial property, let's just say a medical building, for example, what would you put in there as contingencies for your loan? Would you put like a 4% interest rate as your top end? or
Well,
what would you be looking at?
great, yeah, great question. With all this, and thank you. That it allows for a counterbalance,
Hmm.
because with all of the doom and gloom we're talking about, and the potential challenges going through underwriting departments and everything else, we have unprecedented low interest rates.
Right.
The SBA, a lot of the work that you and I try to work on is with the SBA 504 program,
Hmm.
and the debenture is looking to go out, in mid to high threes, to where commercial loans, we're talking about 20-year, 25-year fixed rate loans, commercial starting
Hmm.
with a 3. So
Right.
unprecedented low rates. So we have that. Um, because the interest rates are trading off the respective continuum in the marketplace, and we
Hmm.
have, I forgot to check this morning, but we've had the 10-year T-bill that hasn't seen a 1 in front of it now for a couple of weeks.
Right.
So all of these, the interest rates are low.
Well, how
Quick
many
shift over.
countries are negative interest rates? Yeah.
Not so much. We did have that. It was getting pretty prevalent in Europe until the recent change. Oh, and forgive me, I forget who's now the head there. I believe it was Christine Lagarde, who's now the head. I could be completely wrong on that, but it was a shift in historical mentality,
Right.
and immediately upon that shift, I mean, within 2 to 3 weeks, the amount of paper that was out at negative interest rates dropped a third. And
Mm-hmm.
I have, and that was before COVID came in. So I haven't even followed up on that since.
Mm-hmm.
So there's still potential for negative interest rates, not really here in the U.S. We'll see, like the oil market, never before gone negative, but this is going to be, a 2-day blip. It's
Right.
not going to be going on for months. So we can't count that outlier as only as an outlier. But looking at the interest rate market, flipping back to residential for a second,
Okay.
we still have a lot of instability in the rates there because of other things going on. We don't have time to go into that at this interview, but I'm
Mm-hmm.
back with FHA and VA owner-occupied loans starting with a 2
Right.
all day
On
long.
refi and new purchase?
Refi and purchase,
Mm-hmm.
yes. So, so the conforming loans starting, back solidly starting with a 3. So we're seeing stabilizing there. The underlying interest rates are, the fundamentals are there for low rates. It's just fighting the unexpected impacts of, the low rates stuffing everybody's pipeline, so they didn't need any more business. And then with the coronavirus coming in, having to immediately shift and get everybody geared up to work from home and working through that. That's not just something that in 32 minutes we're all fine and happy and doing good. That takes a while to work through those bumps.
Right.
Appraisals. Having some appraisal companies that voted not to be doing work, others in there. So again, timelines, and we have this commercial resident appraisals or appraisals.
Right.
Having clients that have members inside the household that are at risk, so they just voted to, we're not going to see a notary. So
Mm-hmm.
there were transactions that just came to a halt for that. So there hasn't been any specific points you can talk to. These are all unintended consequences, little
Mm-hmm.
nuances, but they all add up. When COVID hit and Santa Clara County closed down, Santa Clara County was one of the long-standing refusal to accept electronic recording of mortgage documents.
Mm.
Whereas Southern California has been doing electronic recordings for about a decade. And
Oh,
we
really?
would, yes. So the recorder closed down with 800 single family purchases in the pipeline. So amazing. They kind of, after about 3 days, kind of figured out how they were going to do that. So now we have the electronic recordings going in, and there's limited personnel that go into the county every day and work through these recordings. So we're moving with the speed of, you know, Silicon Valley technology, integrating things. This Zoom meeting, Verizon going out and buying another local company that, you know, does similar to Zoom. So, you know, kind of a, you know, working towards the close here, I traded texts with an acquaintance of mine, Chief Economist for Fannie Mae, Dr. Doug Duncan. You know, just a quick quip, looking and trying to get some more information on how things were melting down on the residential lending market. But he came back with a very interesting point, because he's, as an economist looking into the future, he said, the thing that is really out there and the real unknown, which fascinates me, what are going to be the behavioral changes that slide in through society with this? You mentioned Texas and Florida reopening. So we're going to be watching with a microscope on reported cases, counties opening up. The president kind of letting that go to the individual states, because this is not a nationwide, we're open or we're closed. That's you know, South Dakota, never a problem. Oklahoma's never really closed down. They're open for business. So taking that on levels. Silicon Valley.
And George is actually reopening theaters on Monday.
Yeah.
I read that last night.
Silicon Valley, New York City, because we have such a high, not transient population, we have such a high movement of people internationally. So the international hubs are the ones that got hit the hardest. So we'll probably be one of the slower ones to reopen, rightfully so, because of this, you know, all of these shifts. So so getting back to, you know, your question about moving forward, opportunities come when markets are in flux. So we have that baseline. Interest rates are low. Everything is just going to take longer. So turning around and expecting an apartment building purchase to close in 45 days, no, I would be recommending 45, let's call it 75, so we don't have to waste everybody's time and keep asking for 3 and 5 day extensions if everything didn't quite line up. We have the technology, so, you know, paperwork's moving, everybody's moving. It's just a staffing challenge inside the commercial banks with the PPP. And I just heard this morning that legislation is back in front of Congress to fund round 2 of the PPP, because we're out of funds.
Well, the other thing that's interesting is Shake Shack is actually returning $10 million that they borrowed, because they have another source. And it was kind of weird how 2% of the borrowers actually had like over 50% of the loans.
Yes. Well,
how big business snuck into that.
Yeah, the big companies have the payroll processing and the, you know, working with accountants. So, so we're talking, balance sheets and P&Ls that can be spit out, up to within 5 or 10 days. So that's where the big companies had the adeptness to shift and just push a button, and all of the background information that was needed for the application was ready. Small people like you and me, should we have employees? How long does it take us to pull together our payroll records for last year? The first thing we got to do is we got to go through 15, 20 minutes going, what does that look like? The big companies, they're just sending a text to HR and going, give it to me, and it's there in 32 minutes.
Right. Or
So
the controller just pulls up and runs a report on his local computer. The
exactly.
other thing that's interesting is that PPP actually allowed independent contractors to file, but that wasn't really clear, so most independent contractors didn't. So my
Well,
advice to people would be,
yeah.
before
Well,
this
my
passes,
understanding,
understand what the rules are so that when it comes out, you can jump on it.
and my understanding is in version 2 or version 3 of the PPP program, 1099 was removed from that. So it's
Oh, was
strictly
it?
W-2. Yes.
Hmm.
And talking with my accountant, who most of their staff are 1099 tax preparers, they only have their administrative staff. And so looking at it going, we need to do 12 pages of application and documentation for $8,000 of PPP. They looked
Right.
at all of that and voted not to apply.
Now, here's another thing that tags right onto that, is when you look at who was funding the PPP loans, it was mainly small and community banks that were
Yes.
responsive, and the large banks, the Wells Fargo, the Chase, the B of A, they funded very, very few loans. So if you were interested in getting involved in the second round of PPP, go down and get a relationship with your local community bank rather than with your
Exactly.
banker
Yeah.
at Chase or Wells
Yeah.
Fargo.
One of the member community banks that I've interfaced with, there's no compensation paid to brokers, so it's not something to where I can get into the weeds with my clients, because there's nothing there.
Right.
But some of my clients are getting it filled out. I have relationships with a couple of member banks that are doing these, and they specifically were targeting those people that were applying for the 350,000 and smaller PPP loan, which targets a small business.
Mm-hmm.
So I have one of my clients is actually a local termite fumigation company, who great with the numbers and everything else. They banked with one of the big banks, who
Mm-hmm.
basically shined them on.
Mm-hmm.
And then another big regional bank, and they just didn't get a good feeling. So they called me and go, Mike, what do we do? I got everything's done, ready to go.
Right.
And the first time I talked to him, I'm saying, dude, sorry, I don't have anybody. And then through one of my commercial mortgage broker group, somebody says, well, hey, how about so-and-so? So I hooked up with them. They go, yeah, we're taking the apps in. Boom. The next day, slammed my buddy's application into it, and we found out yesterday that he made the cut.
Oh, good.
On the first round. So we're still
Nice.
waiting for, okay, the money's not in his bank account
Right.
yet. So we're still waiting, and we're staying in touch, because it's that experience that I'm sharing around. So yeah, the smaller community banks, I generally recommend go first to the banks that you do have a relationship with.
Mm-hmm.
That's going to be the first thing. And then if not, you need to be trying to find somebody else, somebody like me. You're out talking to folks too, so it's hooking up with other professionals in the marketplace and seeing who's got a guy, who's got
Right.
a gal somewhere that we can
Well, the other
talk
thing
to, that we're
is,
going to get a little love in return.
when you talk to your banker, ask them how many funded loans or how many accepted loans that they had, even if they're waiting to be funded, before you go with them for round 2. Hey, Mike, our time is at hand here.
Yep.
It's been great talking to you. Really appreciate it. Mike is always a great fount of wisdom for me and information. Hey, real quick, why don't you give your phone number so people want to get in touch
Yes.
with you
Yeah.
again?
I'm here in Silicon Valley. My telephone number, area code 408-986-1798. Web address is real easy. It's my name. Just put a hyphen between it. So michael-ryan.com. You find me. And for more of these conversations, send questions off to Chris. He'll collect up another batch of questions, and we'll try to parse things down into a small thing, and just keep trying to help everybody as we do work through this very interesting event that it's here. So let's do it.
Hey, thanks, Mike. This is Chris Vogt. You've been listening to Conversations with Chris. I am your professional connector and commercial realtor. If you are looking for a realtor anywhere in the United States for residential or commercial, please reach out to me and I'll be sure to connect you with a trusted partner in any market. 530-830-9090. That's my cell number. And you can reach me 24/7 if I'm not available because I'm sleeping, let's say. Don't worry, I'll get to you afterwards. Texting is best, 530-830-9090. Have a great day.